Almost. Good morning, ladies and gentlemen. Welcome to the Daily Bone Podcast. This is where we discuss all things crypto market. Got a lot going on today. The continued run of meme coins will be talked about. The UAE canceling crypto taxes. I mean, I can't say that I'm that surprised by that. And we will be joined later by a very special guest, Mike Cahill, the CEO of PYTH Network, to talk about how you can earn rewards by participating in the PYTH ecosystem. So big shout out to Mike for joining the show today. It's going to be a lot of fun. Easy, how you doing, buddy?
I am good, Pio. The meme coin trenches are alive and well. It feels good. The market's heating up. Granted, every one of our picks from last week is in the absolute gutter. So I'm excited to take new picks today. Excited to get some new bets on the table. Started a 10K portfolio last night. 9 meme coins ranging in market cap. Your boy's up 16% in less than 24 hours. So timed it pretty well. Feels good, man. When you're making money, can you really be that mad?
Good timing. I think you might be on the wrong mic. Sig, how you doing this morning?
My ears. Easy just blew out my ears. I'm good, man. I saw Ray's little meme coin portfolio update. We all got absolutely crushed this week, and I was so surprised, Ray. I'd like, can you check the numbers again? Because Mudeng is up. So I would like to know when you're closing the draw on these meme coin draws, because technically I'm pretty sure I should be out given how much Mudeng has moved.
Mudeng is down, right? It's still down. It was in like the 220s when we took it on Monday.
Damn, man.
Correct.
I thought I'd be out of there. Okay. Fine. It's because you made the slight error last week, the week before. So I was hoping my meme coin portfolio is slightly up on the week, but I'll take it. And I'm moving to the UAE. Yeah, that's my new that's my new that's my news for the week. I'm moving to the UAE.
Ray, any interesting stuff from your side over the weekend? Were you in the trenches?
Honestly, I was in the trenches more this weekend than I've been in a year, I'd say.
Wow.
There is a ton of action. Just following what's going on in terms of like trading. Meme coins are graduating. Meme coins are pumping. People are top blasting these like huge wicks and they're still going up. It's crazy to see where we're at right now. It seems like things are like pretty hot. Like I'm very hesitant to like deploy more capital right here, like wait for a pullback. But just watching what's been going on this weekend, it was crazy. Absolutely crazy. New all-time high after new all-time high for a lot of these major coins.
Great to hear. We'll have to dig into it. Look, ladies and gentlemen, before we get into the weather report, today's show is brought to you in partnership. Of course, you heard me mention PYTH Network. PYTH, so if you're not familiar, I'm assuming you are familiar, but if you're not, it's a top blockchain oracle that actually leads this space in total volume secured and number of blockchains supported. So the idea is that PYTH rewards you for protecting the blockchain. Easy. Anything else that we should know about PYTH?
Yeah, it's actually really interesting the way that they're doing this now. So if you stake your PYTH, they're rewarding what's called publishers. So the people who use the Oracle to give prices on things like DEXs, marketplaces, other key places where tokens are traded. PYTH is the one that centralizes that, and you can pull their API or their data to share on your app or platform. The people who have the most accurate data are the ones that are rewarded and are actually getting a score from this. And the way that those PYTH stakers get rewarded is by staking your PYTH. That ends up going into a pool, and that's what ends up getting kicked back by staking it to certain validators, data, locations, etc. by staking that PYTH onto the platform to then drive APYs and APRs, etc. So it's very interesting to see them go back and delegate that and give those rewards. So if you find a good Oracle user, good app that leverages it, you stake it to one of those locations who's publishing the data, and then PYTH rewards you if that location is accurate in the pricing. So it's pretty interesting to see where you have things like Drift Protocol and some of these others that actually leverage PYTH. And it's not just Solana that uses PYTH oracles. It is multi-chain. So other locations are leveraging it and using it as well. We can even see here like Iggy Azalea is leveraging this with that as well, which is awesome. So it's a big platform for data. And I know many people participated in the PYTH airdrop, got rewarded, and maybe even forgot that they're staking your PYTH. But now might be a decent time to go and take a look at that because these rewards are kicking back to the ecosystem. And it's all just based on data validity. They announced it at Breakpoint. It was awesome to see. Met with a roar and applause on the back of this. And one of the best presentations I've seen from a visual standpoint, they had a whole custom video made about these like oracles and protectors, and it was ancient Roman themed. It was pretty badass. So shout out PYTH. Excited to talk with their CEO later today and dive into more of what they've got going on.
Yep. And to reiterate, you can get rewarded for staking your PIF to high quality data providers and securing their oracle. So you can check out, PIF on Twitter. So just x.com/PIF network to follow all things that are happening in the PIF ecosystem. Signal, why don't we get cooking with this weather report?
Absolutely, Pierre. Let's get into the weather report. It is Monday, the 6th of October. Looking at the crypto roundup, the majors are green on the day, with Bitcoin hovering around 63,000, Ethereum just over 2,400, and Solana $146. The leading top 100 coins, it was MOG this week, which is up 17% to a 658 million market cap. Over the weekend, top 3 stories. Firstly, why you might want to move to the UAE. They have exempted all crypto transactions from having to pay VAT. The change, which takes effect from mid-November, applies retroactively to transactions as far back as January the 1st, 2018. Secondly, next up, Coinbase is set to delist USDT and other stable coins that are deemed non-compliant by the European Union. Coinbase will provide an up-to-date plan within the month, including conversion of user funds from USDT to compliant coins such as USDC. And then lastly, the US government has filed a lawsuit to return more than $2.6 million in stolen digital funds from the notorious Lazarus hacking group of North Korea. Yes, they're back. The claim targets the Deribit and Stake.com breaches from 2022 and 2023. That is all for the weather report. It is back to you folks in the studio.
Fantastic weather report. First little story to dive into here is Ansem versus ZACHXBT. So popular crypto influencer Ansem got into a heated public debate with on-chain sleuth ZACHXBT over the weekend on the morality of high-profile accounts promoting low-cap meme coins. So we had the founder of Pump.Fun, Alon, backing Ansem. We had other people backing ZACHXBT. Cases were made for both sides. Ray, who do you think is right?
I think there's a little bit of truth in both. I think that Min kind of like took a neutral stance, and I think I agree with him on like his take, essentially saying like Ansem's just doing what Ansem's been doing, and he gained the following because he's been so good at doing it, and now it's kind of like a self-fulfilling prophecy because he's done so well, people jump into trades, so any trade he makes now does well. So like coming from that standpoint, like Ansem is really just doing what he's been doing, but then again, he should understand that he does have this following now, and when he pumps a low liquidity, low market cap token, it's going to move the market significantly and people are going to get burned. And even though he says he's swing trading it, like, I mean, he's making money off his followers in that scenario.
Dude, I hate to be that person, but who gives a shit? Like, he's not telling you to buy or to sell. Like, he's not pressing the goddamn button for you. I've gotten flack for this too. I'm tired of this shit. Tweet whatever the hell you want. All right. I don't care. Like, he's not tweeting 4K market cap shitters and sending them to 1 million. He's tweeting stuff that's over 1 million market cap. And many times he's just tweeting stuff he likes. There hasn't been any definitive proof that he's been paid or dumped on the followers, which obviously that's a bad sign. If that comes out, yes, you're the bad guy. You're in the wrong. But to me, I just sit here and I'm like, let somebody tweet what they want. If you didn't know Ansem in the 2020, 2021 cycle, he was bull posting DFK from sub $1 all the way up to $21 and round trip the shit out of it. He was a big reason that I looked into DeFi Kingdoms and even got cooked on it. There's a video of me and Wappy wearing suits way back that we did with Pio talking about DFK. That was damn near close to the top. And it was largely because I saw Ansem talking about it and he had a great thesis on it. Could he be better about sharing a thesis? Yes. Could he be better about sharing why he's buying or what he likes about it? Even if what he likes is, I just like the meme, I think that's a totally valid reason, especially in this market. But to me, I just think that I'm sitting here and I'm like, you have Zach push, and don't get me wrong, I think Zach, there's a lot of back and forth on if you think Zach's a net positive or net negative for the space. I'm completely in the camp that he's a net positive, and what he does is good to actually, like, he's retrieved a lot of funds, has close ties to a lot of people and exchanges, has done an excellent job helping secure a lot of assets that otherwise would have been lost. And I think he's completely a net positive for the space. But to me, what Ansem's doing is no different than what he did when he had 100,000 or even less followers, to where he's mooned. The reason he's mooned is because people say this guy moves markets, and if you can get in early, you can make money. If he just constantly lost people money, the space would quite literally, he wouldn't gain followers, plain and simple. Like, that's the argument. And yes, I'm sure many people have lost money. The same people who watch Jim Cramer on Mad Money that ape some of the dumbest shit or follow this guy into literally bloodbaths are what I look at, and I'm like, there's people who are like and hate you regardless because you have a following. If Ansem had 100% hit rate, there would still be people complaining.
Who is suggesting that ZACHXBT is a negative impact, has a negative impact?
Razmir.
Razmir
posted a tweet. It got like 50, 60,000 impressions, dude. He posted, I think it was like, I want to find the exact tweet because I don't want to misspeak on it. But he ended up going back and forth with Wizard of Soho on the tweet a little bit just about it, in which, I mean, he tweets a ton now, which is tough. But he had tweeted about the ZACHXBT. It was pretty simple. He was, I got to find this tweet because it was a good tweet, in my opinion, just pushing back on it. Man, sorry. I should have had this pulled up earlier, but I don't.
I think it's an interesting position to suggest that ZACHXBT has a negative impact on crypto. Okay.
ZACHXBT wants everyone to pat him on the back for all the quote good he's doing. Like, bro, we don't care. 170,000 impressions. So basically saying people don't give a shit. And honestly, if you remember, Zach crashed out a little bit either last year or a year and a half ago, basically saying like, I'm tired of helping like random people. I don't get tipped. I do this for free. All this other stuff. That's the thing. Yeah. And he said, Ansem made me money and Zach made me zero. I don't fully agree with that. I think Zach's a positive in the space. He does a ton of great stuff. I think his information and threads are extremely interesting and very helpful if you're trying to like figure out how to navigate the blockchain. But yeah, there are people who are like, dude, Zach is washed. Who cares what he does? I think Zach's positive for the space. I also think Ansem should be able to tweet whatever the hell he wants, completely unfiltered, because that is what X is about. And if you're buying off of an Ansem tweet, just purely the tweet, you're going to be exit liquidity for the people who have been bag holding some of these tickers. It's just how the market goes. And you're going to learn that one way or the other, regardless if you're buying or not. Like, you learn quickly who you should follow into stuff that moves slower and who's going to just pump something that you could only hope you were in earlier.
So on the ZACHXBT front, didn't ZACHXBT recently assist in the apprehension of a couple of criminals that actually social engineered a $250 million theft of
230 million? Please come correct.
Okay.
Yeah, it was a $230 million theft from, I believe it was 3 to 5 18 to 20-year-olds, and he had everything from like their parents' home address to the nights that they were in the club with signs. Managed to get back 80 to 90% of it. I don't know if it was the whole balance because they spent a lot of it. Like, one guy was buying a female he was not in a relationship with a car and Birkin bags. So I don't think that money was able to be retrieved. But yeah, it was pretty impressive the level of detail he got on that. And I just look at it, man. I'm like, how can you be upset with a guy who is just crushing this and doing good for the space? Like, he also helped in the North Korea hack on the Ronin Bridge. He's helped unveil a bunch of these North Korean multi-users who are devs for ecosystems. He helped with, it wasn't Miggles, it was something on Blast. I forgot what the name was, but these like little animal things that Cyrus was in, that Stats was in, a bunch of people that was in like the $90 million range, recouped the entire funds, helped them actually drive innovation to push back and re-roll some of that on chain to save the money and lock them out. So like, yeah, dude, how can you hate a guy who's literally so EV positive for the space that in a decentralized ecosystem has managed to save $1 billion? I think it's a conservative estimate of people's capital.
Also, as well, to add on that, I don't think like Zach is saying anything like, I don't think Zach is saying anything completely outrageous, which will probably end up in a couple of years from now, maybe in the next 5 to 10 years. Like like the regulators will come in and be like, that kind of behavior, we're not going to allow for it. I can imagine a world, at least in the US, where that happens, where if you're going on social media and you have a large following and you're shilling low cap stuff, I can imagine a world in which like the regulators could come after you if they really want to. But we're not in that world today. And I think at the end of the day, like your own buys and sells, you need to take responsibility of. And if you're taking your buys of someone on X, which has a following that large, and you're upset that you're losing money, that's accountability and responsibility that you just have to take on your side, because that is crypto. Like, people who bought Bitcoin back in, I want to say before 2016, and then it completely crashed, and then you felt like an idiot in that 2018 era. you're probably sitting there being like, I lost money. And you only probably bought back in if you went and studied it and actually understood Bitcoin. All of these, like all these people who I feel are upset about it is people who are just after fast money. And with fast money comes fast losses. So I think anyone on X should be allowed to shill whatever they want, 4 cap, mid cap, large cap. And it's up to you at the end of the day to take responsibility for the actions, because that is crypto there and then.
Sure. So when you say that is crypto, essentially what you're talking about is just the gambling component, which is still
no. I'm talking about Bitcoin as well, Pio, in that, because if you go back to 2018, there'll be a lot of people who bought Bitcoin before it crashed, and then afterwards are like, why did I buy this thing? It's down at 3K or like whatever the price was back then. And it's not understanding the asset that you've invested in and not understanding why it's gone down and why it will stay down and the narrative. And I think like the more people it's a horrible lesson to have, but losing money in crypto is a good thing because it makes you understand the assets and it makes you go in, if you're interested, to understand, okay, why is one crypto asset behaving like that? Why does Bitcoin behave like that versus Ethereum versus Solana? And I think it's a lesson that all of us need to go through, whether that's holding legacy like Bitcoin or is holding the latest meme coin. But if you don't have that lesson, I think crypto is a really, really difficult asset to hold, to buy and to sell if you really don't understand like the fundamentals of it. And the fundamentals begin with something as legacy as Bitcoin.
Sure. But the people that bought that Bitcoin and got mad when it went down, they were gambling. They were buying it and hoping that the price went up so that they could sell it. Essentially what Ansem is doing is he's just promoting bets. Like just like how there's people that promote like sports bets and things like that. It's identical. He's just promoting crypto bets, right? And he can still do that because the crypto market still operates the way it does. So he's essentially the #1 crypto gambling person, right? And there's huge sports betting people out there. If you follow the sports betting space at all, Ansem's essentially the #1 crypto gambling influencer, if you will. He's on the #1 crypto platform. Twitter has no following on any other social media platform. So it's like this one niche, this one platform, and he's promoting crypto gambling on that platform. There's a lot of parallels between crypto gambling and sports gambling. Like, for example, many people know that I'm very into MMA, and you see almost identical energy and response from MMA fans that lost bets towards, like, you know, the fighters, for example. That's kind of who they directed at, because it's an actual sporting event where two fighters compete, right? And so I was listening to a podcast with one of the best fighters in MMA. He's a multi-time champion. His name's Israel Adesanya, and he said that somebody has actually walked up to him in real life, like at a coffee shop or on the street, with the I'm not a gambler, so I don't know that what you call that, the stub, you know, like if you go to Vegas,
slip,
the slip with the slip from the bet, showing Israel Adesanya that he bet on him and Israel Adesanya lost. So think about that for a second, that person that just made a losing bet on a fighter, where obviously Israel Adesanya wanted to win the fight. He didn't want to get his ass whipped. He didn't want to get knocked out. Nobody wants to get their ass kicked in a fight. The person felt compelled to take the slip and walk up to Israel Adesanya to show him. That's some wild shit. So it's essentially the same thing when you see people complaining about a token that they bought the day before going down because someone like Ansem told them to buy it, when their only intention was to buy it that day and then sell it for more money at a later date, preferably literally within an hour of buying it or something like that, right? Just one other example on this, Aiden Ross, really big streamer. A lot of people listening probably know who Aiden Ross is. He went on just an absolute, just a tirade against Leon Edwards, big fighter who lost in the championship bout in the UFC 3-4 months ago. It's like a 1 minute long rant where he's just complaining. He says Leon Edwards isn't a man. He's like, I lost $400,000 betting on you, blah, blah, blah. It's like, dude, Leon Edwards wanted to win the fight. He lost. It's a sporting event that you're betting on. But when I see those rants, I see a lot of parallels with crypto. So, to me, when you think about Ansem and you can't even compare Ansem and ZACHXBT. ZACHXBT is literally assisting the authorities with exposing people that are taking advantage of how easy, and because of how powerful crypto technology is, how easy it is to just steal money in a way that you've never been able to steal before. So he's obviously a net positive for the space. You can't even talk about that. Ansem's essentially just, a gambling promoter that's able to operate because of the way the markets operate right now. Is that unethical? I don't know. I mean, he's promoting everything he promotes is a literal rug pull. Every single thing is a scam in the sense that there's not going to be like some robust business built on the back of it for the long term. But having said that, it's kind of like the nature of assets that trade in this space. It's kind of like a, you're sort of making like a vibe is kind of what you're doing when you make a meme coin. So I don't know. I don't think it's I think he's going to exist. He's a gambling promoter. That's what he is. You just have to understand what he is. He's promoting gambles. So if you want to gamble and you want to rock with him, he might promote something that you win your gamble on. Most people that gamble lose, but some people win. And I believe that crypto gambling is way better than sports gambling or any other kind of gambling because it's still brand new. A lot of people don't understand it. You're effectively still early to crypto gambling. In 25 years, you won't be early to it anymore. And it might not even exist anymore, but you're still early to it right now. And the house doesn't always win. Like there's no pit boss that's going to come and rotate the dealer off the table. Obviously you pay fees to platforms and, there's the cabal and stuff, but it's still better than going to Vegas. I totally believe that if someone has a gambling addiction, they shouldn't go to Vegas. They should do crypto gambling. Like I know a guy with a gambling addiction. I've told him before, like you ought to do crypto gambling, dude, because I promise it'll work out. No, I'm serious. What's so funny?
You're like, oh, you have a gambling problem. You know what you need to get into? Crypto.
If you're going to have just a horrendous gambling addiction, which people do, and I'm sure a lot of people listening know of somebody that has a horrendous gambling addiction. If you're going to have a crippling gambling addiction that you're not going to stop, period, and your whole life is built around gambling addiction, I think you're a dumbass if you do it on sports or Vegas versus crypto or like blackjack and cards. Like, dude, do it in crypto, bro. Like, seriously. Think about if they're plowing all their money in a random ass meme coins, then they hit on Mudang. They no hesitation YOLO'd into Mudang the second they saw it because they got a gambling addiction. They got no problem putting their chips in on the table. And it goes up by like, what, a 500x or something like that? Like, easy. Like they get into Mudang sub $2 million market cap. It goes up to 230, get 100x on it. That's unlike playing a little bit of blackjack. You know what I mean? I'm just saying, like blackjack, you're like hit. We'll get hit on Mudang. How about that? That's
he has a friend we all
position.
want. For all of our vices, he's like, dude, you think you've tried sugar? Have you tried those Krispy Kreme donuts? Like, you're just leading the horse to the water and being like, don't worry, man, you might hit that. You might get rich one day. Look, Pio, I agree with you. I 100% agree with you. But if I had if I knew someone had like a really bad gambling addiction, am I going to tell them about crypto? Probably not. I kind of want them to get better. But anyway, I agree. It's easier. It's faster. It's on mobile. You can do it anywhere. And you can't get banned from it.
Yeah.
I just had a revelation too. Speaking of the gambling addiction, we've been looking at the poly market for who's going to be Satoshi, right? This documentary drops tomorrow. How many people are skipping the entire movie directly to the end just to see who it is? Like that just clicked for me. Is like, how many people are going to skip this doc just to make sure their poly market bet hit?
I'm the opposite. I kind of don't care about what hits. I kind of just care about how they're framing Bitcoin.
Yes, that's what I said, Ray. One thing was interesting. Someone so our show the other day, Friday, got more views on YouTube than other shows, not by like some outrageous amount, but just by a little bit. I was like, I wonder why. And I realized it's because of this like Satoshi thing. So like this Satoshi thing actually is a story. Like in our title, we talked about like Satoshi identity revealed and stuff like that. And someone wrote a comment that was like, stop jibber jabbering and tell me who Satoshi is. I thought that was pretty funny. I'm like, the guy clicks on a 1 hour long podcast video and he's like, bitch, just say who Satoshi is as soon as the thing starts, like that was interesting to me. So look, next segment. Well, first of all, Ray, we got stream drops, correct?
Yeah, I'm just running them. We're running them all week. We're running them all month. They're just firing off. I think the cooldown's up now. I'm going to test running one right now. But if you're listening and you want to participate in a stream drop, no, we still have a couple more minutes. I'll be launching one in about 2 minutes.
Okay, 2 minutes. We got a stream drop. We hit an all-time high on Friday for stream drop. So shout out to everybody participating. Let's blow that all-time high out of the water. If you do participate, by the way, ladies and gentlemen, you do get rewards. And I believe it $10,000 worth of the USDT is being given away by stream, among other things. It's a really cool interactive way to participate. Look, next story, we got Easy posting a meme coin portfolio over the weekend. How much of this is copied by that guy? What's his name? Murad?
So some of it does have overlap, but there's also some that don't. I would say I think 3 of them are overlap, maybe 4, but there's a bunch that aren't because most of his are higher meme market caps. So there's even an updated one, Ray. If you want to go to the tweet that's quoted on this one, which shows what I bought, the only one missing from it is Mog because the platform I'm using is only Sol. So I quoted this again with the 8 other tokens that I purchased. The way that I did this was 3 that are over 50 mil, 3 that are between 10 and 50, and 3 that are under 10 mil market cap. So Giga, Mumu, and Mog are all on his list. Lock-in, Aura, and Harambe, I don't believe all 3 were, but those are my mid caps. And then Kobe, Stan, and Dog is the dev are not because those are my high risk, low market cap. So Giga, I really do like. I think that goes to $1 billion. SPX 6900 is probably like my favorite narrative. Like we're gonna flip the stock market, but it's an ETH coin. So I only wanted to take one ETH coin, which was Mog, because it is like it's a cat and it's a culture coin on ETH. I think more people know what mogging is versus flipping the stock market, and that's kind of why I was like, let me go with Mog on this. So I do think Giga and then Mumu. It's a bull market. Like this is the mascot of the bull market. Pretty straightforward. They've had plushies. They were all over Breakpoint. Great marketing presence. And the team is just loud. They reply guy a ton. They're everywhere. Lock-in, Aura, and Harambe is the mid caps. I liked Lock-in and Aura because it's like Gen Z phrases. And I think phrases outpace any TikTok meme because people just say it. Like popular Twitch streamers are like, oh, you have Aura, or I'm locking in. Let's lock in. Those are the ones where I really liked it because it's subtle shills. Anybody can say it in any capacity, and that's like a subtle inherent shill that happens. Or ended up pumping about 40% on the back of this, which I was like, oh wow, talking about great fucking timing. I'll take that any day. So now that one's sent pretty damn hard, which I'm glad about because that was a big win on that. And then the 3 lower caps were Kobe, Stanley, which is the Stanley Cups, which like every Gen Z girl has in videos. So I'm like, once again, subtle marketing. I'm on that. This one was shilled by Ansem. I ended up buying into this pullback, which I'm happy about. And another one, great marketing at Breakpoint. Everyone had this little keychain of Kobe, and the meta for it is like everyone's best friend. So they're very pro working with other meme coins. They do a great job of that. And that was why I thought that I liked this one. And then Dog is the dev. Rumors of it bridging to Runes. Chartfoo's the developer behind it. And their whole like meme is you post a picture of your dog and say it's the dev. It's like a general dog coin. This is the most recent one, newest one by far, so definitely the highest risk. And that was why I wanted one that was like very risky, that could have some serious upside if done well, or could go to 0. But the way I allocated this portfolio was the top 3 that are over 50 mil got 60% of the whole port of the 10K. So $2,000 each into those. The middle tier, which is 10 to 50, each got $1,000, so 30%. And then the bottom tier only got $1,000 total, so $300. So I tailored the risk portfolio slightly on that, which is, in my opinion, one of the better ways because those that are more volatile could outpace on gains, but the downside risk is lower, which is what led me to take this approach. And yeah, there was certainly some Murad influence on it, but I would say his influence led me to go and do a lot more research on things like Giga and some of the other ones that I didn't know a lot about. Like I did a lot more research on SPX, found out they have an NFT that's currently 1 ETH, and that's where I'd probably want exposure to SPX 6900. But yeah, I don't have a ton of overlap. This was definitely more of my own take on some of the similar things here. But yeah, that was kind of where my swings came into it. We're up $1,600 right now, up about 16% in 24 hours. So I'm not mad about that. Nothing like a nice little start to the challenge.
Easy. 2 questions. 1, how long are you holding this portfolio for? And 2, how are you managing the profits on this, taking profit on this portfolio?
I'm not selling anything on it until December 30th. So we're holding it for all of Q4. So that's the plan, is the entire rest of the year. And at that moment, we sell the whole bag, either tax loss harvesting or gains. So I'm holding it through the entirety of Q4. New Year's Eve, we'll sell the whole thing, all of it.
Okay, why?
It's more of just a challenge to see what happens here. Like, yeah, I could definitely strategically monitor it more, but I'm more interested in the time of it and taking profit at the end of the year to see how this Q4 kind of starts. A lot of people saying this is like the first inning of the meme coin super cycle. And so I'm kind of hoping that's what we get here. If it is, then this port theoretically should be up 2x, 2.5x. And if I can make 10, 15 grand going into the end of the year on this, I wouldn't be mad about it. It's also like, to me, this just makes great content. Now I have a portfolio I can constantly check in on, share, adjust, talk about. And if something crazy happens, like say Giga goes to $3 billion, then yeah, I'm probably going to take profit before the end of the year. You know, like there's certain moments where I think we'll trigger that. Or say like Stanley Cup goes to 100 mil from 6 or 5. Like, yeah, I'm going to take the 20x and call it a day and book it. Like there's certain things that will drive it, but the end goal for this is to check on it every Sunday, share that, and take profits on New Year's Eve.
Interesting. And so these are things that you just bought. You just bought.
I bought them yesterday. Literally every single one I bought yesterday. That spreadsheet actually has the amount of tokens I have, the purchase amount, and the date. And I'm gonna update that. Ray's got a script for me. It turns out that I can automatically just pull it and get updated pricing every Sunday. So I'll be posting that, just where the price is, my general high level thoughts, and sharing it.
Nice. Speaking of taxes, someone said, I'm doing taxes after Pio has said to do it all these years of listening to him. I literally have no idea what to make of that comment in any direction. You're saying you've never done your taxes before. I've never told people you need to do your taxes. I'm just very confused by that comment. But anyway, so Mu Deng has a $100 million ETH meme coin now?
ETH CTO Mu Deng giga pumped. The ETH one is running. And call me crazy, I think this is the one that is the best trade. This is the one. We saw the ETH Nero get listed on exchanges. All it's going to take is this stupid Mu Deng on ETH to go to like 250 mil, and it's going to get listed. It's going to get listed on a Binance, a Coinbase, something.
Because it's not a pump fun coin?
Correct. But Flog got 2 tier 1 listings, Crypto.com and Gate.io. Gate.io over the weekend, Crypto.com last week, and it's the highest market cap pump fund at 180 million was its peak. Was the all-time high for pump fund tickers, I believe, all-time high. And that it's got 2 tier 1 listings. So this might open the floodgates for pump funds to get listed on exchanges.
Wow. Well, that is something that I did not see coming. That's a lot of power for Mu Deng to just explode to $100 million on ETH. How do you feel about ETH meme coins versus Sol meme coins? I guess given this, I mean, look at this chart. It's pretty crazy.
Insane. I'm way more interested in base meme coins than ETH. As crazy as that sounds, you have Jesse Pollock listing DGen on Coinbase as the VP of engineering. So now there's 3 coins there that I'm most interested in. KeyCat, Miggles, and Brett are the 3 that I'm most interested in. Just because I think those are the 3 with the highest potential to get listed. I'm still so wildly bullish on this stupid cat purely because Coinbase spent an exorbitant amount of money to create a commercial about this stupid cat. And I'm like, I think they could bring it back. If this thing gets shown again in a future commercial, it's going back to 80 mil.
Why does Coinbase, like, they want to promote a meme coin? That's like a wild thing to me, kind of. At the same time,
what do you mean they want to promote a meme coin?
Well, I mean, like, oh, you mean, so sorry. So this, but if Coinbase lists Miggles,
yeah,
is that not kind of, approving of it?
I guess, I think so. But I mean, like, there's an argument to be made that, yeah, they're technically approving of it, but I also don't think it's a bad thing. Like, it drives more volume and it almost incentivizes people to pay closer attention to Coinbase. It's made on the Coinbase chain. It incentivizes builders in Coinbase to launch more things if they're going to bring more liquidity to it. And yeah, I do think it approves it. But at the same time, like, DGen was originally a meme coin that was rewarded to people who used Farcaster and then spun up its own L3. So there's technically more utility to it. But you can't tell me Coinbase is not aware of this meme coin rally that's happening market wide. It has to be feeling some type of way about missing out on fees.
I know that Coinbase has incentives to increase volume on base and generate fees. Of course they do, 1,000%. I just feel that promoting any sort of meme coin, if you are Coinbase, does contradict the messaging of these ads. Like, remember that viral ad, which was like about how people in the millennial generation can't afford to get a house and cars are expensive and, can't afford to have kids and all that stuff, right? And then the message on the back of that is like, crypto is an alternative solution. But if crypto means buying a random ass meme coin that might pump really hard, but if you don't press the button at the right time to sell it, you'll actually have less value than you did, going into it. That seems to contradict that, right? So like that's the one part that's confusing to me.
I look at it the same way that you have ESPN sharing betting lines. Now, literally at the bottom of every single game. Like the NFL literally has lines throughout the game, which like you could make the same argument for is like, what is the need for it? Aren't they just incentivizing people to lose money? But it almost drives more interest in that chain or more interest in what's going on. Because now if they list Miggles, you know damn well every holder is going to be eyes on the next commercial to see if Miggles is in it. It almost incentivizes people to pay closer attention to the app, to the brand, to marketing campaigns, and if anything, discuss with more people. Like me going up to someone and being like, "Yo, you're not really familiar with crypto. You think ETH and Bitcoin are too expensive? You could buy Coinbase's cat." And people are like, "Oh yeah, that's funny. Like the cat looks ugly." Like that's an easier sell to somebody who doesn't get it, in my opinion, than some of this other stuff. And it just draws more interest and more attention. Will they? Who knows? But my bet is I think there's some legs for that.
Also, I think sorry, Ray, go on.
I was gonna say, I think it's like they're trying to like build the culture of meme coins on base. And they want to do anything they can to do that because meme coins right now have the most product market fit among almost any kind of crypto app. And if they can bring everyone like where the action is, everyone is looking at meme coins. If they can bring that to base, that's just a huge net positive for them. With Miggles, I mean, it's not like they launched the meme coin. They just launched a cat and like launched the framework around it where you can like edit it, like put post memes, etc. I think they're just really leaning into it now that Jesse's on the executive team, really leaning into meme coins and trying to bring that culture to base. And I think that's an important thing for them if they want to grow. Both short-term and long-term, to be honest.
You don't think they knew what they were doing, creating a meme generator for that cat to be live day one?
No,
like,
I know. They know exactly what they're doing. That's what I'm saying. They're leaning into like bringing that meme coin culture over. I mean, they didn't launch it themselves, but like I'm sure there's some legal issue around that. But they did what they did to like provide the infrastructure for that to launch and then the narrative to grow.
Sig?
Yeah, no, I was going to add as well. Like I think because we look at meme coins from the perspective of looking at it on X and spending all this time on Discord. There's sometimes like, we're almost at the end of the year. Meme coins have been out for what? Let's say best part of a decade now. And right now they've proven over the last 24 months how defensive they are and how much attention they bring. The narrative around them is completely changing. And I think 2025, we always talk about what is the new thing that comes out every single year. Well, one of those things could be that we're now starting to see institutions like Coinbase just accept these meme coins, accept for the fact that they have so much momentum. And now, tokens like Miggles can actually get listed. I think the narrative is shifting much faster than we actually perceive it because we're kind of on the inside of it, but the attention on the outside is now strong enough. And if that means that's going to make fees for them, I don't think that really skews away from the advert that you were talking about, Pia. I think it actually makes it stronger because it enables people to actually take control of their own finances and their own future there. So
Yeah,
that's kind of how I'm looking at it in terms of Coinbase just running with the narrative.
Yeah, I just find it fascinating. You got a publicly traded company that now has essentially a layer 2 blockchain as a product in market, only publicly traded company with anything like that right now. Really fascinating stuff. Just from a business perspective, I think it's pretty juicy stuff, pretty interesting. Hard to understand how it's going to play out. Some quick October analysis here. October, of course, being the nickname for October based on the historical performance of Bitcoin during Bitcoin's 4-year cycle. We're here, going in to call it cycle 4. If you're looking at hardcore Bitcoin cycle history, I'd say it's probably cycle 4. Some people might say it's cycle 5. But to me, it's cycle 4. Bitcoin typically bottoms 3 to 4 days into October. This is analysis from ZACHXBT on Twitter. From the bottom to the end of October, Bitcoin is typically up 32%, 36% if you exclude Octobers that have had a negative return. This is, the Octobers that are not in the halving year of the cycle. We tagged 59.8K on October 3rd after a sellout. That's literally 3 days into October, ladies and gentlemen. As he pointed out, that it typically bottoms 3 to 4 days into October. If we return 30%, which we statistically have previously on 59.8K, by the end of the month, Bitcoin will cost 77.7K. The question that Ray posed to the panel, do we see $75,000 Bitcoin this October? I feel like that's an easy possibility. I don't know if I'm going to stake my reputation on a price prediction for the end of the month, but I feel like that's on the table. Ray, what do you think?
I'm nervous because I'm seeing more and more of these posts coming and more people having consensus that like October is going to be October yet again. You know, all the numbers line up. All of the halving years have been positive. We're averaging 32%. Like we're seeing this like time and time again. So that makes me think it'll be less likely to happen. But I don't know. I'm feeling the bullish vibes that have been coming over the last couple of weeks. I see all of the catalysts in place. Like it's gonna be very easy to look back and be like, how did we not know this was coming? It's having, there's ETFs, politics are making it a major part of our platform. Both the Democrat and Republican. It's an election year. It's just hard to fight against that tide, in my opinion. I think we do see 75K.
Easy. What do you think?
I don't think we see 75K. I don't. To the end of the month, I think we'll be close. You know, let's get over and hold like 69K before we start yelling about 75. That's where I'd like to be. Yeah, I don't think so.
Real quick, Sig, I want to hear from you. Ray, pull up the MicroStrategy MSTR chart real quick. Thank you to Daddy Nick, longtime listener, Daddy Nick. Big shout out to Daddy Nick for pointing out that MicroStrategy Monday morning open 15 minutes in. Very nice little candle there. Love to see it, Michael Saylor. Anyway, sorry, Sig, go ahead.
No, that makes me really happy. It makes me really, that's like an anthem shill when you own the ticker. You know,
you have MicroStrategy. I forgot about that.
I've got MicroStrategy, baby, and I've had it for a long time now. So I'm super happy with that. Right. No, I don't think we see 75K before the end of October, but I don't think it really matters because we are going to see it at some point and probably before the end of the year. I'd move that to the end, like before the end of the year, probably like even January, Feb time. Definitely in the next 4 to 5 months is where I would stake my reputation, but not for the end of October.
And real quick, if I could add some context that actually would probably put me in the same camp as Signal and Easy, is I think that maybe the factor that makes this different, this halving year different, is the ETF, in the sense that we've already kind of seen a lot of the gains that we would normally get from the traditional 4-year Bitcoin cycle because of the ETFs, and thus we have not fully calibrated back to where we should go. So I think in October 2020, which by the way was around the time that Michael Saylor was doing his initial campaign around Bitcoin. I mean, he bought it earlier in the year, but he was publicly speaking about it in like September and October, if I'm not mistaken. I could be wrong about his very first public appearances, but I think we were at like 10K in October or something like that. Maybe we're at 15 or 16K in 2020. Ray can look it up. But anyway, that would be the factor that would make me think that this October would perform differently, in the sense that maybe an October is a 10% gain versus a 30% gain, if that makes sense, because of the oddity that happened this cycle, which is the introduction of the ETFs, which led to an all-time high before the halving, which had never happened before, which could have essentially given us price appreciation that needs to be factored in when you think about the percentage potential gain in a month like October. So that's what I would throw out there. This is why this stuff's hard to predict, ladies and gentlemen. There's a lot of factors going on. So interesting stuff. Look, ladies and gentlemen, we have a very, very, very special guest. Honored to be joined by Mike Cahill, the CEO of PYTH Network. Mike, how you doing?
I'm doing great. Excited to be here. You guys have been talking about some fun stuff this morning.
Absolutely. Well, you're doing some fun stuff over there, some stuff that's for sure over my head when it comes to, building crypto products. Look, we talked about that PYTH is, an Oracle protocol. Individual market participants are able to participate in PYTH, which I think is super cool. But Mike, could you give us the elevator pitch on PYTH? I think most of our audience is familiar with PYTH, but in case anybody isn't familiar, I'd love to hear your pitch as the CEO.
Sure, yeah. So at the end of the day, crypto is risky. PYTH makes it a little bit safer. And the way that it does this is it brings data in on a secured basis to different blockchains so that applications can build with that data. If you zoom out and you think about crypto as innovating this layer of trust, there's validators, proof of work, all these things that are embedded in kind of the trust model. As soon as an application builds something with data outside of that state, it becomes risky. And so that's what PYTH does. And it does this at huge scales. And so it's on 80 different blockchains. There's about 450 applications that are using, there's over 500 price symbols that are distributed. And the data gets trustworthy because it comes from publicly available brands. These are trading firms and exchanges that all have reputations. They all have businesses outside of blockchains. And they're not just running this for the sake of being able to make money here. This is a big kind of portfolio strategy position of theirs. That's number one. Number two, it's got all the cryptographic layers of security. It happens on a public blockchain. Prices and data is all aggregated together in an intelligent way. Number three, there is now, and it's been around for about 2 weeks, there's an Oracle integrity staking mechanism that protects the data in the event of a mishap. So, really large scale infrastructure project.
And we're going to talk all about the kind of nitty gritty when it comes to PYTH, but I'd like to ask you, as someone that's building, a DeFi, network product platform, however you want to describe it. I think in crypto, there's a lot of concepts that people accept really early because they make sense and it's understood that they're going to be a thing, right? Like even if you look at NFTs, having digital artwork, right, and having it be high value, people accepted that right away. It's definitely a thing. Having it properly play out and be adopted, at a mass scale is a completely different animal. It's very similar. Obviously, this example gets brought up, the 2000.com bubble, pets.com. Well, yeah, it turns out that ordering your dog food online was a good idea. We just weren't ready for it in 1999. I've never bought my dog food in a store. I've only bought it online. So the idea was there. It took a long time for it to, get to prime 2 days shipping, buy it online with free shipping. It comes to your house the next day. With DeFi, I feel the same way. I feel like if you are going to suggest that DeFi isn't going to be a something that is used at a mass scale, then you're just not, you're not paying attention to how technology works. To you, in 10 years, right? Because I really do think a lot of this stuff takes like a long time to really get to that point. In 10 years, what does DeFi look like to you if it kind of scales out the way that we imagine it could?
Yeah, first off, I totally agree with you. And I think that the issue that we had with the internet was the infrastructure wasn't yet good enough for pets.com to work. And if you think about it, like downloading 10 images on Amazon in the mid 90s took you about 2.5 minutes. That's not fast enough to compete with even turning the page of the Sears catalog, right? Where it'd take 1 second to load 10 images. Yep. So as infrastructure gets better, it really enables this adoption. And that's really what PYTH is. It's infrastructure that increases the speed, decreases latency, makes things more cost efficient, et cetera. So what's like the sci-fi version of DeFi that I'm most excited about? I think it does for the internet and for usability, what internet kind of 1.0 did to publishing, right? So back then, the first version of it was taking the New York Times and putting a PDF on the internet. People hypothesized that, it's right now used for chat and for sending pictures. And then many years later, that's kind of what it's used for, but it's just done at so many different scales. And so there's a lot of feature competition. So I actually think that we've seen the majority of the base primitives already get deployed on kind of what we've seen in DeFi, but it's going to get much better. And then we're going to see lots of wild ways of feature competition. So to give you an example, the two killer use cases I think of for DeFi is kind of active trading and then passive trading. Active trading is very obvious. It's, pretty similar to what you'd have in like a CeFi or a TradFi experience. It's pretty good. The biggest unlock is that he's got lower switching costs. So as soon as you have an experience that you don't like with your exchange, you can go and pop over to a different exchange. The passive side of things, I think, is the most broken, right? If you wanted to invest in a hedge fund or you wanted to become an LP in Sequoia, like where do you even start? Like that's just non-existent industry for most people. So I think that one's going to probably take off even more, or we'll at least see people participating in that for the very first time. Whereas on kind of the active trading side, I think it'll just become super fast, super efficient, easy to switch, easy to onboard. And then we'll start to see the stuff that we see with social, which is like Snapchat or like LinkedIn, where there's kind of really clever ways to get people to be able to speculate, take bets in a way that's kind of more addicting and just more fun.
Awesome. Yeah. I mean, it's wild to think about, and hearing your perspective as someone that's actually building this stuff is always obviously a good time. When you think about PYTH and DeFi, what improvements to DeFi, has PYTH kind of brought about?
Yeah, so the things that we focused on are across three verticals. So it's speed, cost, and trust, right? So on the speed side of things, we wanted to make sure that we were delivering price updates at the lowest resolution possible. And this is pretty easy to do for crypto prices. And I say prices because that's the primary thing that people are using in terms of data for DeFi. So crypto is like kind of easy to get. There's all the crypto exchanges. They haven't yet monetized by putting subscription gates around their data. But when you start thinking about that problem as an abstract one, it's a huge industry to sell market data in the traditional finance world. It's $7 billion for real-time market data. It's just a tremendously gated industry. And so PYTH doesn't stop at crypto. It's got all the asset classes from the existing TradFi world or kind of existing finance world, from equities and bonds and commodities, FX, all available there. And that's available to anyone who's kind of building at the lowest resolution possible. You don't have to wait 15 minutes for it to become available on Yahoo Finance. You can get that at close to time zero. So that's the first one. The second one is, well, how do you source that given that it's such a high revenue business? And so the answer to that is go to other people who've got lots of data who are not in the data business and get them to join the data business for the first time. It's a little bit like creating a competitor to hotels using Airbnb. And our competitors, the hotels in this case, are people with a whole bunch of vacation homes. So there's trading firms that have troves and troves of data, and they just use it to train their models. But now they can actually publish that data to the blockchain and then contribute to this data economy. So that's number two. You can do that with a much lower cost of access to this data and distribute it. And then number three is around the trust. And so trust is derived from the fact that there's so many name brand institutions who are providing this data. So the likelihood of them wanting to screw up and ruin the reputation is very low. There are mechanics in place so that each price feed has to be aggregated by a minimum number, say 10 contributors. There's these confidence intervals. There's a algorithm that matches it together in an intelligent way. And then at the end of the day, the thing that really sort of secures this is Oracle integrity staking. So Oracle integrity staking is a mechanism whereby people stake tokens, both publishers or delegators. In the event that the PYTH price is incorrect, they're slashed. Everyone's familiar with proof of stake and how that works. If the validators turn off, they have a slash. It's the exact same mechanisms here, except this makes the data itself explicitly protected, and overall the system very, very much in a manner of being anti-fragile. And that's cool. It's the first time we've ever seen this done at scale. It protects all 600 symbols on all 80 different blockchains. And it really just changes the paradigm from one where there was an Oracle risk, and now there's really no Oracle risk if you're using these PYTH price feeds.
Fascinating. I appreciate that analogy. The Airbnb analogy makes it easy to understand. Easy, do you have a question for Mike?
Yeah, I guess like the main thing here is when it comes to delegating to these certain data providers, it's kind of a two-part question. The data providers, how do you like determine who uses it, or is it completely open for anybody to become a data provider? And then the second piece is the delegation to those. Does the user have more control, or can we actually give PYTH the control to determine who we delegate to? I'm curious, like how much user involvement is necessary here.
So currently the publishers are gated, and there's about 120 of them. And the litmus test for them is, are they a big enough brand so that they've got more to lose by trying to screw up PYTH than they have to gain? There aren't these no-name kind of two-person validators. It's all industry kind of stalwarts. There's even publicly traded companies like Virtu, Siebel Global Markets, and it's all public, pyth.network/publishers, and you can see who they all are. So that'll continue until I think the stake becomes more meaningful, and maybe there's a requirement where you can post a certain amount, and that way you've got real economic security in. But for the moment, that's all sort of disclosed. On your second point, you as a delegator have the power to choose which publisher you want. There are some tools in place to make that easy, though. So if you go to the staking website, staking.pyth.network, and you connect your wallet, you can see which publisher has a cap that's available. and how much you could potentially earn in a reward for that, for staking to that publisher. So it's up to 8%. For delegators, there's a 20% fee that goes to the publisher because they're kind of supplying the data. And then you earn that as long as there's no slashing events. Slashing events should be very rare. And you know, there's kind of details and documentation around the rule book and how those actually happen. But it's really up to the delegator themselves to choose. And but at the end of the day, it's quite straightforward. You can find kind of publishers who have got lots of symbols. There's a ranking score that helps you make a decision, and then you can even diversify across a few.
Any follow-up on that, Easy?
No, that was kind of the main thing I was curious about. So being able to just determine on that. And I guess the rewards. So when it comes to the rewards, I don't know how much you can share, but is that going to be on like a sliding scale? Is it fixed? What does that look like? How often should users anticipate those rewards? Just from that pure user standpoint, like what can you kind of expect?
So the rewards are distributed every week, and users can claim them. They'll take them in their wallet. They're paid out in PYTH. The first year of the term, because this was all passed through the DAO, it was proposed by the message board, and DAO kind of voted on it. The foundation granted in 100 million tokens for this program. So the rewards are up to 10%, and it only starts to dilute after after we're basically saturated. So there's over like 1 billion tokens that have been staked in the program.
Nice.
Right, and just to add, there's currently about 150 million tokens, which is about $50 million dollars worth of stake, which is pretty cool to see in the first 2 weeks.
Definitely cool to see serious volume. Sig, any questions for Mike?
I was going to ask if someone wants to get into PYTH, then how would they do that? Like, what would be the first steps?
Yeah, so PYTH is really built for builders to create applications that people use. The two classic types of applications that rely on an oracle are on-chain perpetuals and lending protocols. PYTH's market share with the on-chain perps is incredibly high. It's about 75% of all perps on any chain have integrated with PYTH. And that's a point of pride that we have with the network, to make sure that we are providing the right product for that use case. And then lending protocols, and these are the ones that have the huge TVLs. So like Camino on Solana uses PYTH, but there's countless others that do the same. So from a builder's perspective, you go to the docs, it's fully permissionless. You don't need to call anyone up. You can just grab the SDK for the ecosystem that you're building on. And for like a user that's wants to know more, maybe they're not building an application, I think the way that you'd want to get involved right now is on the staking side of things. And so there's this meme where you can kind of protect DeFi and earn yield. And that's kind of a cool idea, right? You contribute to the resilience of DeFi, and you're sort of rewarded for it.
And that's at staking.pyth.network. So Ray flashed that on screen. You can do it again. So that's where you stake your PYTH and you can earn rewards for protecting DeFi. I mean, look, it's very interesting stuff, and I'm going to be looking forward to seeing how this continues to progress over, call it, the next 6 to 18 months. Ladies and gentlemen, you should also follow Mike, M.Dom Cahill. So MDOMCAHILL. Mike, any closing thoughts, anything that we didn't cover that you'd want to get out there about PYTH or DeFi in general?
Yeah, so we just commissioned a report talking about like the ways that people value oracles. And in the past, it was only around total value locked, which I'd mentioned around like kind of lending protocols. And this opened up a new category. They've actually added it on DeFi Llama about the total transaction volume that's been enabled. It's just a paradigm shift, and it's just the natural evolution. It's for people that are really in the weeds and care very deeply about how you can value one oracle provider versus another. And it's also for application builders to understand, kind of who the market leaders in their respective fields.
Yeah, and there is a there's a percentage of the audience that loves to go deep on that stuff. So that's great to have that material out there. Mike, this was a real pleasure. Again, ladies and gentlemen, check out staking, staking.pith, PYTH.network, and you can start earning rewards for protecting DeFi by staking your PYTH. Dive into the ecosystem. Definitely some fascinating stuff. And give Mike a follow, MDOMCAHILL, Dom Cahill on Twitter. Mike, thanks for joining us, man.
Thanks so much. It was a pleasure.
Likewise. That's our show, ladies and gentlemen. We will be back tomorrow. We do the show Monday through Friday, 9 a.m. Eastern time, each and every week, right here on YouTube, Twitter Spaces, X Platform Video, Apple, Spotify podcasts, wherever you get your podcasts. Appreciate you guys listening. We'll be back tomorrow. Big shout out to our partner for today's show, PYTH. Again, staking.pith.network is where you can go to stake your PYTH and start earning rewards for protecting DeFi. Ray, I'm going to end the video stream.